We all know that pump and dump schemes are illegal. But what if I told you there's a legal way to do pump and dump and it goes on every day in the market? Hello, I'm Robert and welcome back to my channel. Pump and dump has been a problem for years in the crypto market, forex market, and stock markets. It's illegal. It'll get you put in jail. But there is a legal way of doing pump and dump that is flooded the crypto market for a very long time and is actually quite destructive and dangerous. That is what we are going to talk about right now. And we're going to discuss it by looking at the chart we have on the screen. What you're looking at is a run with a $10,000 budget using 1% per position. So for the duration of 3 years, it's made a 14% profit, risking very little money. The highest level on this particular strategy, I believe, is only about 4 or 5 positions per trade cycle. So roughly $500 at risk at any given moment of a $10,000 budget. Proper risk management. And we see that it has taken 259 trades. So that is really a very good strategy. It's long-term, it's consistent, it's profitable, it's a well-built, meticulous approach. So let's see what happens when we go to buy and hold. Well, if we look at this says we could have made $40,000. But that is a deception. What you're looking at is a budget of using only 1% versus the buy and hold of the entire balance. That's right, TradingView is comparing a 1% position size to what it would be like to invest $10,000 at one time. Talk about a gimmick and a lie. That's great if you invested right here and sold perfectly right there. If you made those two decisions, you would have a landslide of profit. Your $10,000 would have brought in $40,000. But how likely are you to be that precise? How likely is that going to happen, that you investing $10,000 into one single position is going to magically turn into $40,000? The truth is, not very likely. What's going to happen more likely is you're going to invest up here and then it's going to rock bottom down here. In which case, you would have lost $40,000. That is the truth of buy and hold. Buy and hold is no different than pump and dump. And if you've gone through my Patreon recently, you would see that I actually lay this out with real world examples of exactly how this situation happened. And that's all because of my patrons and their support that I could spend this level of time doing this research. So to my patrons, thank you. Because of your support, I've been able to actually prove this quantitatively. Buy and hold is the legal way of doing pump and dump. That's right, you heard me. Buy and hold is pump and dump legally. Because unlike pump and dump that's used to manipulate different assets of accounts or money management, buy and hold turns the tables by creating a sense of fear. By paying people that have bought in down here to manipulate the price, saying it's going to the moon or it's going to be the next great thing. But then somewhere in this line, they get out, leaving you, the individual that doesn't have inside information, to buy up here and then lose it all. It's legal because they didn't force you to buy. Unlike pump and dump that manipulates the buying process, that forces people into purchasing. So what you literally see here is a direct and deliberate psychological stunt that gets people to buy at the worst opportune times. And then they end up holding for recovery. Hold on for dear life. It will recover while they continue to pump money out of the market. You keep losing money over time. It's a gimmick that is really genius when you think about the psychology behind it. It keeps you in the market with all of your money wrapped up while they keep taking money out of the market. So let's see if we can find another example. Okay, we have another 3-year-old asset where we have buy and hold versus simple trading with a 1% position size. We can see that with a simple 1% precision size, we would have made $791. Only 7% return, but the drawdown and the trades are reasonable. Not bad when you really think about it. But now let's see what happens for somebody that bought and held on for dear life. Well, if they bought in at the same time, right now, they would be $5,000 or more underwater, are pretty much liquidated for holding. They would have lost everything pretty much. Their entire $10,000 portfolio would have been gone. So we can clearly see that buy and hold here failed again. Money standing still is never profitable. The reason you could buy a stock like the S&P 500 and buy and hold on it isn't because it's going to lose money over time. It's because it's going to give you money in the form of dividends. That's the point. You're going to make money by holding it through dividends. The same is not true in crypto. The same is not true in forex. These are non-appreciative assets. You can't make money by holding. Not unless you're really lucky or you have inside information. That is the truth behind buy and hold and the entire lie of the market. Let's see if we can find another example. For this last example, I want to demonstrate one of the quintessential tokens that is often used of why buy and hold is so good. Now we've seen from the previous first two that they look great when they're going up in price. But when they start to go down, they go down hard. But so is an asset that commonly gets used as the reason why you should buy and hold. Because even though trading this at a basic $100 position size is going to bring you 10% profit with very little risks and high numbers of trades. The people that push buy and hold, the people that facilitate this kind of rhetoric and scam, always point to this kind of process. If you'd bought down here, look what your profit could have been. For a $10,000 position, you could have had $75,000. Could have. Maybe. But what if you didn't buy down here at the bottom? Or what if you didn't sell at the top? What if you bought in here and kept holding for the promise of the moon, and you're still here? You didn't gain anything except lost resources and maybe even lost money. This is the kind of gimmick, the kind of psychological manipulation that people that push buy and hold really do. The kind of stunts that affects millions of people worldwide, that causes them to lose their money by letting their emotions get to them. Buy and hold is no different than pump and dump, except instead of somebody lying to you and twisting the decision or investing without your permission, you're doing it to yourself by believing that one of these assets might magically take off. That's not to say that it might not, but the question is, are you really going to get in down here? What is the probability, realistically, of the 6,000 cryptocurrencies on the market that you are going to pick the right one at the right time to get into with $10,000, and at the magic right moment to get out of, to be able to walk away with the profit and not be accused of insider trading? Think about that carefully. How many people really were able to make this kind of a trade? Not very many. And the ones that were, if you go by the current evidence, a very large number of them were insider traders. Buy and hold is a lie. It's a gimmick. It's a fraud. And if you believe in it, the only one that will be left holding the bag at the end of the day is you, while somebody else walks away with your money. It's better to trade your money on your own terms. Buy and hold works because of one simple gimmick. That's right, greed. That's the only reason why buy and hold works. Why should you accept $11,000 when you could have $75,000? Shoulda, coulda, woulda, maybe, maybe not. Don't buy into this kind of a lie, because you will lose everything. That's not to say that trading is going to be profitable, but in trading, you control your risks. You're not risking your entire $10,000 budget. You're risking very small amounts over time. And that is important. Risk management is everything. I've talked about this a lot. But risk is something you have to control. You can't trust the market to control it for you because it's not your risk they are controlling. It's their own in the process of taking your money. Don't fall for this lie. This is a lie. It's a deception. But because you chose to put all of your money into this one asset, you are at fault, not the people that lied to you or basically scammed you. Trade responsibly and safely. If you want to hold on to an asset because you believe in it, that's fine. But do so on your own terms, on your own conditions, on your own budget. For example, instead of $10,000, perhaps only investing $1,000 or $500. That way, if you get stuck in a position like I demonstrated earlier, you're not wrapped up with all of your money. You have a simple process that lets you automatically control your risk. Let me know what you think. Have you been caught in this trap before? With somebody, a group, promising that an asset is going to go to the moon, only for it to collapse? Be sure to check out the Patreon article, where I show real-world cases of just that circumstance, with people losing millions of dollars. The link will be in the comments. Please like this video if you found it helpful. Subscribe if you're not for future videos. Thank you for watching.